In Ankara today, we saw how a ceasefire 5 months in the making came apart in a single afternoon. The Islamabad memorandum was supposed to end the U.S.-Iran war. Instead, this breakdown asks what 60 days of diplomacy actually brought before it fell and what its collapse now puts back on the table. Let's talk about the rise and fall of the Islamabad memorandum, and the subtitle on the screen says it's plainly the 2026 U.S.-Iran war and the trillion-dollar cost of fragile diplomacy. Since fighting resumed, the U.S. has struck more than 80 Iranian targets, all the way from Kang Island to Revolutionary Guard sites. The memorandum signed June 17 set aside 60 days to negotiate a final deal. Now that window closed without one. Economists now put $2.2 to $3.5 trillion of global output at risk if this war resumes in full. It means, therefore, that back here in Nigeria, people considering or looking forward to a reduced pump price might have to throw that out of the window. But how did we get here? Let's trail the path. We're looking at 5 months, 5 turning points. The war erupts February 28. Recall when U.S. and Israeli strikes kill Iran's supreme leader. A fragile 2-week truce follows in early April, mediated by Pakistan. And by mid-June, that truce becomes the Islamabad memorandum signed by President Trump and President Pezeshkian. Now, late June brings the first violations. We hear disputes over Lebanon and alleged tolls in the Strait of Hormuz. And then by July 8th, Trump has declared the memorandum over, calling further talks a waste of time. So what really is inside the 14-point MOU? This memorandum was a performance-based framework, not really a peace treaty. It called for an immediate permanent halt to fighting, including in Lebanon, though Israel and Hezbollah never signed on. It reopened the Strait of Hormuz toll-free for 60 days, with Iran clearing mines and, of course, the U.S. lifting its blockade within 30 days. Iran is to reaffirm that it will never seek nuclear weapons. And, of course, there is sanctions relief worth $300 billion fund pledge that if Iran complies. Interesting, right? But why did it break? While we're back at square one, 3 cracks run through this collapse, and it begins with enforcement gaps in the area of nuclear stockpile, proxies, and missiles, which were deferred without strong verification. There are also regional spoilers. Israel's continued operations against Hezbollah in Lebanon, which Iran treated as a violation despite never being bound by the deal. And then talk about strategic miscalculation. Iran tested boundaries with shipping attacks and tolls, and the U.S. answered with more than 80 strikes. Underneath all three, we had domestic hardliners on both sides. It was Trump's maximum pressure posture against Iran's resistance narrative. Now, what does this mean at the global level? We're talking about the global growth at risk. The World Bank had already cut its 2026 growth forecast to 2.5% or lower. And that's even before this collapse. And it's driven by energy-linked inflation. Losses under the now broken ceasefire already exceed $1.3 trillion, with a full war resumption pushing that towards $3.5 trillion on the scale of past major crises. Gulf oil production dropped by millions of barrels a day at the height of the fighting, and over 80% of Gulf food imports moved through those same disrupted routes, and oil prices jumped 7% the moment the memorandum was declared over. And that threatens Asian rationing and also higher European gas prices, with emerging markets absorbing the heaviest cost. Now, diplomacy indeed brought time, or bought us some time here, but not a settlement. The Islamabad memorandum was a pragmatic off-ramp that never really resolved the core grievances like enrichment, proxies, and Israel's exclusion from the deal itself. Its collapse shows that short-term frameworks cannot substitute for verified, inclusive settlements. Now, the coming weeks will test whether restraint or renewed confrontation prevails, with trillions in global output still hanging in the balance. We'll go on a break and we'll be back with more. Stay with us.